All right. Hey, this is Dan Langenberg from Long Mountain Family Banking, and today we're going to be going through the introduction to Becoming Your Own Banker by R. Nelson Nash. I love the introduction. It's short, it's sweet, and it really gets to the point. So let's get started. So, at the very beginning, at the outset of the introduction, R. Nelson Nash makes it very clear that this was, at first, a 10-hour course on the power of dividend-paying whole life insurance. This book is education that the life insurance industry should have taught during the last 200 years. Unfortunately, the industry has concentrated on the death benefit qualities of the contract and have neglected to adequately discuss the living benefits, the financing capabilities, essentially, that it presents for the policy owners. So that's the big punch is the financing capabilities, and they say that he says in the book that you finance everything you buy, and what he means by that is you're either paying banks for these big purchases like your home or cars or whatnot, but there's also this element of paying with cash, and when you pay with cash, now you've interrupted the growth of that cash. You have a sinking fund now. You got to raise more money, spend it, and then it goes back down, and you're just constantly going up and down, up and down, up and down. Whereas this is a whole different way of thinking about your cash flows and your finances. So let's keep going. I love this. This book demonstrates that your need for finance during your lifetime is much greater than your need for protection. So he's right from the outset. You've all heard the term buy term and invest the difference. Sorry, it's a slogan. The slogan, buy term and invest the difference, right? Which emphasizes investment, right? Buy term and invest the difference. So there's the investment. But it neglects the whole financial picture of how you spend your money, how you finance your any purchases, but especially your big purchases. You're either going to go to an outside lender and have to pay lots of money over a long period of time, whereby you become a slave in many respects, or you pay cash, and now the money that cash could have been earning you and through compound interest growth could have been building you a fortune, but now it's diminished, and so now that money is no longer working for you. So he says this: solve for this need of finance through this instrument, and you will end up with more life insurance than the companies will issue on you, which is neat to think about it. If you're not so focused on the protection aspect of the whole equation and you're more focused on the financing thing, you end up getting the protection that you probably always would want in the first place. So it's like people think, well, what's the bare minimum of protection that I can get? But if you think, well, if I'm using this for financing, you're going to look at this in a completely different light. You're going to say, what's the most I can get? What's the most I can control? I can have control of my money, my cash flows, and put it through this system. And now I've become my own banker, and I want to maximize that. It's a whole different way of thinking about life insurance. But it's not, again, you're getting away from the mindset of protection, life insurance, product, and you're thinking about a process of cash flows and financing. I love this. He says, the fact that the principles have been there all along and no one taught them to me makes me angry. So this is something that you should consider, that even if you decide this isn't for me, know that this thing is out there. For me, it's created like a plumb line to be able to compare other financial products to, because you are using dividend-paying whole life insurance, which is a product to accomplish this process. But it's just a really neat thing that you should know about, and Nelson's making it perfectly clear right here, that he wish he would have known more about this. He says here now, ready? The whole idea is to recapture the interest that one is paying to banks and finance companies for the major items that we need during a lifetime, such as automobiles, major appliances, education, homes, investment opportunities, business equipment, etc. So what he's saying is, instead of going to outside lenders and not capitalizing first, essentially through this creating an asset, a system through dividend paying whole life, and just getting something for nothing, so to speak, and just going to outside lenders, we're going to be paying a lot of money in interest. Even at a low interest rate, 4 or 5% over a 30-year mortgage is going to be like over twice as much for the house. So instead of $300,000 for a house, you could be paying $600,000-$700,000 for that house over a 30-year period. And houses are really expensive now, and it's just it's sad. But there's hope, and this is the idea. Instead of paying these banks all this money over 30 years and just these with this interest, you're recapturing. Now you're recapturing this interest because even though you're paying interest to the insurance company for the borrowing function with the policy loans, you're also receiving dividends, and your money just keeps on growing and growing and growing every year without fail. That's what it's designed to do, and these things work. It's our behavior, whether we can put those premiums in and pay back our loans and be good, honest bankers. We're the weakest link in this process. But here we go. So he says very clearly here, this book is not about investments of any kind. It is about how one finances the things of life, which can certainly include investments. So this isn't a either or. It's not like you can do the stock market over here, but so that you can't do this. It's like or real estate or some other kind of an investment. It's like, dude, you can do both, and you know what I mean. You can have this and go and invest, and I've done that in my own life. I have I've done loans for people on a house and in a business, and so here I have this asset, right, that's continuing to grow while I'm borrowing against it and lending it out to people, and they're paying me back as well. So that's pretty cool. Let's see, where are we? Again, this is not a procedure to get rich quick, he says at the outset. Again, this is not glitter glamour. This is a product that's been around for over 200 years, coming on 250 plus years actually. And these mutual insurance companies have been paying dividends for over 100 years without fail, many of them. And so that's encouraging. Even through ups and downs and hard times, they're still giving out dividends to their policy owners. You are a mutual shareholder. You're a mutual owner. You're a mutual owner of the company. And that's why you're receiving these dividends. And so, yes, this takes long-range planning. This isn't get rich quick. He was a forester, Nelson Nash, and so he's thinking long terms, 40 years, 70 years into the future. And that's just good, wise thinking. That's long-range planning. That's thinking about more than just today. It's thinking way out there. How many generations can you think about into the future? Are we just thinking about us today? Are you thinking about your kids, your kids' kids? What about 3, 4, 5, 6, 7, 8 generations into the future? That's all really exciting to think about. So he says this was here way before the IRS was created in 1913. This is a major paradigm shift. He's very clear about that. The last principle of number 5 is rethink your thinking, and you really have to go be willing to have an open mind and to go against the conventional wisdom on finance here. Like I said, buy term and invest the difference. The big talking point, the slogan that the gurus point out. They're always repeating that, right? Don't take into consideration, or at least they're not, the whole picture of the financing. What do you do for financing? How do you purchase things? How do you buy the things of life throughout your life? And so this is a bigger, more holistic picture, I believe. And so read it with an open mind, and you will discover a whole new financial world. So there you have it. There's the introduction. I love the intro. It's short and sweet, but it really helps you start thinking about that paradigm shift in your thinking. And that's what's really necessary in order to really become your own banker. And so I highly recommend that you get this book and you read it. It's 92 pages. It's a 2 to 3 hour read. It's not hard. You can listen to it through Audible as well. It's around 20 bucks. But at least consider the material. Like Nelson said, he was angry that someone hadn't sat him down and said, listen, you've got to understand this thing exists. And so there you go. Long Mountain Family Banking, Dan Langenberg, or you can go to longmountainfamilybanking.com and schedule a call with me.